Well, I'll show you the same information.
Oh. Thanks.
Okay,
Just
I'll
you can
let
list
you know.
it, I can sell it. How about that?
Okay.
That's right. So,
Thank you.
You're
this
welcome.
is very important information about reverse mortgages.
Yeah, I want to hear it.
Yeah,
You never pulled, she said pull yours over.
thank you. That
She
was
said pull yours over from that
She's
screen.
only June, so as soon as we got there, and then
Yeah, pull it.
Judy's like,
Oh, you're trying to get down
are
here.
you ready to eat?
Yeah.
a little blank.
We should. We ran out of
The banks.
yes.
Remember she said you have to pull it over like we do it at home. You gotta pull it up.
For yourself.
Managed to get those off of Amazon.
Go out there and.
Are you gonna stick around?
The pigeons race.
No, you gotta, yeah, you gotta pull it up, you gotta pull it over. Let me show you.
Yeah.
I think that's what AC was trying to tell Cross,
I know.
but they, it's.
Remember she said you have to go, go down.
But that was something.
Yes,
else.
you got it.
I was talking to her about.
Thank you.
Thank you. Thank you guys so much.
That's how we have to do it.
We didn't have a big crowd, we had a very interesting crowd.
That's good.
And we will continue spreading the word. Very good.
Yeah, you actually posted on that, on the website today, yesterday, how was that posted on?
Which one? We've had several.
That's good.
We said a lot of information, so, you know, when I said we were starting it, just Yes. I'm glad to hear that.
I saw you guys.
services over there?
Yes, we use the teacher over there by the. The last one they called, I think they had the, what we do is we go any place in Fayette County, professional courtesy, we'll let the other department know that we're there and invite them if they really come. We go to churches, we're out there. We did a lot a couple years ago. We've been doing this now over 3 years.
Gosh, and there's still been 40%.
Well, it's dollar value.
They're getting better at it. Getting much better.
The investment schemes are worse.
They don't wanna waste their time.
The investment scams, I mean, it sounds like something legitimate, and it goes on and on and on. It's an app, and, yeah, it's easy to fall for that.
Yes, ma'am.
What's the difference between a robocall and a phone call? Cause I'm like you.
Could be both.
I'm
Well,
like
robocall is usually advertised.
Yes, I saw that.
And
And I thought that was real.
somebody answers.
My bill.
You're phoned in.
About my bill. Remember
And the
on
next call goes out will be the 2, and the 3, and then the 4.
Yeah, cause I was hearing what Clark Howard was saying, that you keep getting the same robocall, you be taking no action against somebody.
Well, they got that, call,
Cause see, I'm
do
on
not
you,
call,
I'll
the
just.
government
So
website,
just
do
go
not
back
call.
one forward.
Oh, yeah.
That's Janet Green called me, I thought.
It's the government, it doesn't work.
I asked her.
You from there, you from there.
Listen, they're not long as I've been in this, stuff I gotta make light of
You like that up there.
I mean, you have to bring guys.
I was doing good every now and then.
I know.
You could see me.
I mean, you have, I mean, it's like,
But I do like it. Yeah, I like that.
They called me, I'm there,
Yeah. Our church has one with
They don't
countdown.
take no for
Okay,
answers.
that's good too.
Yeah, I love it.
Yeah,
Yeah,
Yeah.
I sit off to the side, so I'm always like, oh, she's thinking about, oh, okay.
Well, I
I'll stand
won't,
another 6 minutes.
I won't be long. I just wanted to talk, with the seniors and scams thing, a big thing that people are doing on the lending side. I've been doing this for 27 years, is about mortgages and taking equity stripping. We see that, getting second liens and deeds on homes and stuff like that. So there's a proper way to do reverse mortgage. A lot of people are like, you know, they're afraid to do it because, oh, my parents lost their house or they didn't do this. The biggest thing is to talk to someone who's actually a licensed, loan originator who's set up with different banks and everything. So that's just kind of what we're going to talk to today. It's kind of, we're doing our mortgage, what's your mortgage IQ type of things. Like the scams are a big part of it. The QR codes, a lot of banks now, we go through the QR codes. That's how the easiest way. People can't spell, or you spell the wrong thing and you get on the wrong website and you start putting your information in because they're cloning websites. So even with the Vandy websites now, like just your name, you got to get that cleared by compliance and all that stuff. And a lot of times they won't let you, they're blocking the transfer of websites and stuff. So, and a lot of seniors now, people were like, oh, well, seniors not going to get on there. What we just saw today, 70% of the seniors are using our own social media and are using the internet to buy their products and everything versus going in the stores. COVID got everybody online and everything with so that's the issue. The first thing about reverse mortgages is kind of the name sucks. Let's just say that. The name sucks. It's really, but we're going to say reverse, but we really think of a retirement mortgage. It's a special type of loan that allows homeowners age 62 years old to convert part of their home's equity into tax-free cash without having to sell their home, move out, or make monthly mortgage payments. You guys know why it's tax-free? Because you've already paid taxes on that house. This is your money that you're getting back. So it's your money that you're getting back. So that's why it is tax-free. So that's kind of like, some of the terms that people don't, realize is they go in and he's bought his house, he has $150,000 worth of equity, or I want to go put my deck on, or I want to go do something for my grandkids. So people do that, instead, because you don't have to pay taxes on it, and everything. It's not like you sold the house or anything like that. How does a reverse mortgage work? It's just your home equity conversion, because basically you're converting your equity, into cash. So it's based on, a lot of times the the loans are not even based on the people's credit. It's based on the equity. So a lot of seniors are like, oh, I can't get a loan to fix my roof, or I can't get a loan to fix my AC, or my 87 Buick finally broke down. You know what I'm saying? I don't want to go get a $600 car note. I just want to go buy a new car. Those are different things that you could do. As long as it's your primary residence, you're fine. The loan repayment, the loan is due when the home is sold, vacated, or the borrower passes away. So when we say the borrower passes away, we're talking about the last borrower on the loan. So if you're 85 and you got a sugar mama that's 63, you may not have to pay that off for a long time. So, but if you're also 85 and you marry somebody that's 55, y'all can't do it. She can't be on a reverse mortgage, or he can't be on a reverse mortgage with you. So that's what a lot of people don't realize. The loan amount is based on the home's value, the borrower's age, and the interest rates. So people say, oh, you don't have to pay it back. You don't have to pay it back while you're alive or whatever. You do still have to pay your taxes and your insurance, all your escrows. So basically, when they look for qualification, they're going to look at two things: how much equity that you have in the property. Then they're going to look at your age. So someone who's 80 is probably going to be more, with 50% equity is going to be more of a viable potential reverse mortgage candidate versus somebody who just turned 62 and they only have 20% equity in their home. So the equity is a big part of it and the age of it. So the thing about it, and we'll go through it, you can never owe more than a home's worth. So if you have a centenarians in your family and they got a reverse mortgage at 70 years old, you can never owe more than 95% of the home's worth. So people think you can be upside down. It's an FHA product. It's FHA insured. So that's so the bank so that's how that works on there. So and you go through a class and everything. So key benefits: no monthly mortgage payments. You stay in your home. You get a lot of people now, I want to retire in my home. I don't want you putting me out the pasture. I don't want you putting me over here or whatever. It helps a lot of people stay in their homes. They've paid off the homes. That's when you do the reverse mortgage process, you do have to have an heir or whoever's going to be your estate planner with you. They have to take a class with you. They have to understand everything. Again, it's tax-free proceeds. It's a flexible use of funds. We had a guy in California when I first got to Georgia. The guy did the reverse mortgage. He had a $7 million house. Took out $3 million, put $1 million in the bank, bought a $2 million mobile home park. and makes $250,000 a month in California. California mobile homes are a little different than they are in
Oh,
Georgia. A little nicer. Makes $250 a month off that.
One,
People-
I know exactly where her mobile home was, and it was like, it was on the beat, it was amazing.
Yeah, and so there's a little difference. So he can do that. People are like, how can you do that? Because it was his primary residence. As long as it's your primary residence, you're still in the same, you're still under the benefits of the reverse mortgage. And so that just when you go to different areas, the FHA limits are different, and then you're just on a different thing. So that's where the flexible use of funds comes from. Some people, I want to pay my kid's wedding or my grandkid's wedding, or I want to do this or whatever. It's an FHA insured security. So again, HUD's in your business. The two people you don't mess with are seniors and veterans. So the FHA and all the places they talked about, the Federal Financial Securities Act, CPP, all that stuff is all in it. It's a non-recourse loans, which means your heirs never owe more than what the home's worth. So that's what we were talking about. People think, oh my God, Mom, grandma lived to 110. I don't know how much she's gonna be upside down on this home. It's not possible. So if they estimated, they have actuaries and all that, they said, hey, she got this when she was 75, we fixed this, we did this to the house, renovated so she could stay there. They said grandma had another 10 years, grandma lived another 25 years. And then this house so when they look at it and they say, oh, the house was probably gonna be worth $750, it's worth $550, guess what? Y'all can buy it back or refinance it for 95% of the value. So you're never upside down. So that's one of the biggest things in it. You continue paying your property taxes. Again, that's the biggest thing. People get in trouble when they're alive. They don't pay their property taxes. They don't pay their insurance. So what they've done is a lot of times they will go ahead and will say, hey, your first time you're doing this, you're based on your income. Yes, you could get some money out. We're going to fix your house. We're going to put a little bit back in a CD for you, but we're also going to hold the escrow for 5 years, of your taxes and your insurance and all that stuff. So they can't make money on that. So like say they have it in an account and that account makes money, that goes back to you. So you can actually get an investment line of credit or a CD that's sitting there that gains interest. So you gain interest on the money that goes back to the homeowner. Loan repayment occurs when the borrower permanently leaves the home. So either passes away, or if they say, you know what, I got a reverse mortgage on this house in Peachtree City, I'm moving to Florida. Guess what? As soon as you move to Florida, that home needs to be sold, or that mortgage needs to be refinanced. So heirs may.
You have to self-report?
Huh?
You self-report? Like, what if
You should self-report.
like,
I mean, you should, if you're gonna not be there, it's 6 months out of the year for your primary residence. So if you have a place in Colorado and you go skiing and you live in Peachtree City, long as you're there 6 months in a day, you can do that. So that's the thing. Heirs may receive less inheritance due to reduced equity. So people who go like, oh, I wanna leave this to my daughter free and clear, you know what I'm saying? It may not be a big thing, but if you have kids who are like, hey mom, we probably don't want the house anyway. I know you want to be here and I want to get it fixed up. Those are conversations that you have with your family. And you're also going to have with a counselor, because the counselor is part of the process. Is it right for you? It's a conversation for you, your spouse, your family members and things like that. The ones that I've done, just some examples. I had an older lady. The first one I ever did was an older lady in Houston. I don't know if y'all know what the the homes on cinder blocks are before they started doing foundation. I went through there, I came in, she was telling me, hey, don't step up. I stepped through her floor, she had a rug there. And there was like nothing. It was just no carpet, it was just wood. You could see through the bottom, you could see the dirt. She was getting Social Security, that was on her disability. She's like, and she couldn't even sign her paperwork or do anything, because she's like, I either gotta have my arthritis medicine or I gotta have my lights and stuff like that. Own the house. I forgot what they call it. Like you're in Houston, you see this little row line of houses, then you see expensive homes. House was worth like $300,000, really just for the space. She owed nothing on it. Only needed, basically to put her house back on piers and to fix the floor and to get her medicine and stuff. So there's situations like that. Then there's also situations like, oh, I want to pay for my daughter's, pay off a bill, or I want to pay for a wedding, or we want to buy a vacation home. So there's different uses. So when you do it, I tell people kind of know why you're doing it. Yes, there's no repayment and stuff like that, but she didn't have anybody else. So she wasn't concerned about leaving it to a kid. Her son had died. She wasn't concerned about leaving it to anybody. She was concerned about living you know, and being out. So that covers, she got enough money, and she also got a check every month because she got an annuity set up to pay her electric bill, to pay her gas bill, and everything. So you can do all that stuff.
Who helped her set up the annuity?
She has the counselors. So when you go through, you can say, hey, I'm gonna, I don't owe anything on the house, or I owe this much, I want this much out, so I wanna put 50 grand in the annuity, and I can do this, or a line of credit. They do a line of credit now. And so the line of credit is based on, you make 2% more than the mortgage rate. So if the mortgage rate is 7.5%, then you're gonna make 2.5%.
Wow.
You're gonna get paid at 9.5%. So just, that's gonna vary the time you lock the loan in and everything. And again, it's not based on credit. So somebody could have went through something.
That's good to know.
It's not based on credit. There is only product that's based on credit. There is a second lien mortgage thing. So you're at a 3.75%. You're like, I can pay this, but I just need this fixed on my house or whatever, and I don't want to do anything else. So you could do that, or I may move to Florida. I don't know. I'm in New Jersey and I want to go south. All my kids live down south. So it's called the Home Safe. And they can do that one where they take a certain, you still got to have a good amount of equity, but you only owe 100 grand on the house, and it's a $700,000 house. You can go get up to 4 million. Not that most people don't have that much equity in their property as a second lien, and you don't pay on that second lien and do what you want in the first lien. And again, you can always make payments. It's not that you can't make payments. You can write in a payment every month and it's going to knock it down. Or you can say, hey, I still work and I want to make a payment. It just gives you the flexibility and takes the stress off for some people. Again, you always want to consult a mortgage, also not just a mortgage consultant, myself, consult a financial advisor. Consult, whatever, and then, the more people you talk to, like he said, you're in the community, they're going, oh, it's going to be this, you're going to be that. You got to know, what's good for you, because a lot of times people like, my kids don't have it, we have this property, it's just me here. We got a lot of people now. He talked about Crestwood and everything. Like I'm not gonna mention the agency, but I have people calling me, they's like, hey Reggie, can you pre-qual this person? They can transfer your equity. You don't have to have a home already to become to get a reverse mortgage. You could have had someone pass, you got $250,000, in life insurance money and some other money, and you want to go live in Crestwood. It's a $400,000 house. Guess what? You got a lot of equity and you get a mortgage with no payment. So those are the things too. And agents, a lot of people don't realize that when you're moving from one home to another, so it's easier for someone to do that, and they don't have to have a good credit to qualify, again, because it's based on the equity. So a lot of the new home builders, the 55 and up communities, they have a reverse mortgage, specialist to help people with that. Because you give the options, you can say, hey, I'm going to get this mortgage and my payment's going to be $3 grand, or I could put, and I'm still putting down 200,000, 150,000. Or I can put it in and I can make payments, when I have to. Or in his situation, he makes enough money where he can just wait to sell his house or do whatever. So just gives you different options. And the other thing that people don't know, you can refinance a reverse mortgage. It may be something you temporarily do. Then someone gets, we have a lot of, because I don't know if you guys heard of silver divorce, people over 55 getting divorced. So they came up with a program like that. That's part of the Home Safe product. They don't have it in all states, where someone's like, I'm going to stay here. I'm going to give you this, this amount of money, or they refinance it and they don't have payments until they turn 62. So it's different things that you want to go out there and talk to. A lot of the banks, we do it. We're Cardinal Financial. Bank of America has one, Wells Fargo. So the thing about it is, we do ours through Finance of America, reverse. They have a lot more products than a lot of times that your normal bank does. I don't know if Navy Federal does it or not. I don't think they do.
So Finance America requires the credit, the counseling part of it.
All of it's required, yeah.
Is that a requirement for every reverse mortgage out
For
there?
every reverse mortgage, you have to go to a counselor, and it's not the mortgage counselor, so you have to do it. Even the last person I did, he retired from Georgia Tech, and he was blind. So I had to go to the house, set up the call. Him and his wife was was with him and his daughter, and they did the training over the phone. So they're going to get to you either way. You can go in and do the training. They can come to your home. You're going to do the training. It can't close until it's you and a family member. So it has to be somebody who knows. Common objections. I don't want to burden my heirs. I just want to give them a free and clear house. A lot of times, y'all are agents. The kids don't even want the house. They don't even want the house. They want the money. They want the money. They're like, how much equity is gonna be left, Mom, when you when you leave? I'm gonna rent that thing out, turn it into it. I'm afraid of losing my home. You stay in the home as long as your obligations are met. So if somebody and they're like, oh, their taxes in Peachtree City, in Fayette County, we all know what our taxes are like. So they're gonna say, hey, we're gonna hold back this amount of money to make sure, because on your retirement income, to make sure that you have enough for your escrows. So that's what they're gonna do. So they can still save it where it's gonna pay your insurance and your taxes every year when they're due. So you don't ever lose the home as long as you still live in the home or you're alive. It sounds too good to be true. It's regulated by FHA. It's FHA insured. It's not like some hard money program, some Wall Street program. It's an FHA program. I want to leave the home free and clear. Still possible, and it's still possible depending on repayment. You could just take the obligations where you don't have that monthly payment. You have a lot of people that are seniors who are self-employed, and so the market is hitting them whatever. You have a good month, you can go make a mortgage payment, you can send in principal payments just like you do in your mortgage now. You're just not obligated to send in a monthly payment. I don't understand how it works. Her question, you have to have a counselor. You have to pass a test.
Oh.
You have to pass the test. So it's not just like you sit there for 8 hours, and just like, you have to pass the test. You got to get the paperwork done and all that kind of stuff. So basically what happens is someone does a mortgage calculator. So anybody who's of age 62 and older should probably, if they're trying to do some type of refinance or home equity loan, have a mortgage advisor give them a reverse mortgage calculation. Honestly, our company requires it. So that you can see the different options, because you may be like, okay, my house is down, I got to get a new roof, I got this, I found water damage. Yeah. And then you're like, okay, you could do a home equity loan, you got a lot of equity, but guess what? You also have a payment that maybe you didn't have before, or a larger payment, you know what I'm saying, that you didn't have before. Some people are still stuck on the 9%. I run across people who bought a house 20-some years ago at 9%, and they just pay that mortgage and they've never done it. You know what I'm saying? So, and they're like, I'm not going to refi because of the fees or whatever, but they're paying an $800 payment, but then they're like, okay, I don't want to get a larger payment and have now they're looking at, okay, 9%, you're going to be 6.7, but you got all this other stuff involved. So you look at different things for them, and you're supposed to actually give them those options. Let's see here. What is reverse mortgage purchase? Again, you can go in at 62 years or older. You can say, I'm going to basically transfer my equity from one house to another. I got $300,000 worth of the equity in this home in Jersey, and I want to move to Peachtree City, Georgia. My kid plays soccer. She's a soccer star over there. You can transfer that equity and not have a payment. So you get the house listed, get the contract wherever it doesn't have to be a senior living community, anywhere you want to, and you go there, as long as it's going to be your primary residence. People get it from life insurance policies. They get so much money and they're like, hey, cheaper than renting a place. Think about it. You may not have $200,000, may not buy you a house in cash, but $200,000 is a great down payment on a $350,000 home that you only have to pay tax and interest on, and then you can go work and then pay what you can. Down payment is usually typically 45 to 60% of the purchase price. Again, like he said, a lot of people are buying these houses in cash. So if they don't want to use all their cash, or they didn't have that much equity, that's easy for them to put down. They were thinking about buying a $400,000 house. They needed $400,000, and they can put down $200,000 and not have a mortgage payment. One-time move, ideal for downsizing or relocating. So basically, you could have your house listed, just like you were saying, close, and then they transfer the funds over to the new thing. So you don't have to
Basically like a normal transaction.
Yeah. As far as y'all are concerned, it's a normal transaction. You would just get a reverse mortgage pre-approved. Basically they're going to pre-approval because it's going to be different than them doing it. They're usually going to afford more. A senior citizen is usually going to afford more on a reverse mortgage because you don't have a monthly payment. It's based on equity and age. So you actually, as a senior, and you have and you do a reverse mortgage, you can actually afford more of a home. So it's not like you have a lot of people who are taking care of their grandkids. So it's like, I want to take in my grandkids, but I can't afford the mortgage. Like, I can help them, but I can just, suspend my payment. I'm still paying my tax and insurance, but I can do what I have to do, for them. Or they got kids that have issues, what I'm saying? They just can't be on the title. Only the people 62 years or older can be on the title. No monthly payments. We talked about that. One-time move. We did full ownership. People always say, who owns my house? You own your house. If you have a house now, you own your home. So the bank does not own your home. When the person passes, the last person that's over 62 years old that is on that title, on that loan, they still own the home. So there's nothing to do but say, hey, granddaddy passed, grandma's still alive. That's all you do is you turn the paperwork. If someone passes, you have 12 months to sell or refinance that home. Where people get in trouble is, like he was saying, they ignore the mail. That's not the mail you want to ignore. So you have to tell them every 90 days, what is your intent? So as soon as they find out the last person on that deed is passed, the bank wants to say, hey, so are you guys going to buy this from them? Does the estate have a plan? And you're like, oh, we're going to list it and we're just going to sell it. So you send that to them and they do it. They're going to check again with you in 89 days. And you can still check in 90 days. We sold it, it's closing on this day. Oh, you know what? The grandkids, we have someone, we want to buy it or we're going to refinance it. That's the only time people get in trouble with reverse mortgages. Charlotte, we have a client now. I'm helping them to get out of it. They're like, oh, they're taking our house. I'm like, she died 2 years ago. She died 2 years ago. Y'all shouldn't even have it. And, and I'm like, she's stressing and we just got them pulled. I got them pulled out of foreclosure today. They're supposed to be foreclosed on the 5th, on Tuesday. She's been with the Lord.
Well,
She's been with the Lord almost 2 years.
they said they didn't know about the, notification.
How much equity's in the home?
Oh my God.
It's worth like $750.
The bank has the house already set to be sold for $705.
Yeah.
I just helped them get the payoff. They owed $305.
Gosh, no, yeah.
$305 and $305,049.
Wow.
And they're about to lose this
They were gonna lose it.
because of family and arguing, and then okay, let you do it or whatever. So that's equity. That's generational wealth.
Yes,
That was going to go away. So forget whether the granddaughter purchases it and flips it or what. It's her. You did leave her something. Do you get what I'm saying? It wasn't.
Yeah.
It didn't have to be free and clear for her to make money. The bank already has this house listed for Tuesday for $705.
Wow. They could list it with an agent, sell it for $750. Yeah.
Do you see?
Yeah.
Yeah, and I'm like, is it livable? And then and then it's so those are things that you got to do is really, and then going through helping them get in contact with the people, and then banks are banks. I'm not going to say like okay, we can make twice as much than what they owe us on here. So when she passed, and then they had interest, and then the lady's been gone almost 2 years, so they got it. They were supposed to sell it.
For 2 years.
There you go. They have not paid anything in 2 years, but the utilities at the home. They moved into so it is a good, it's a good thing. You may have, someone could do it. Like your kids may I don't want to live in Peachtree. I want to move to LA. Okay, guess what? They probably sell that Peachtree City house and move to LA. I don't know how long it's going to last them, but it's there. But those are the situations that you see when you hear people say they took, because they didn't follow everything has rules. If we don't make a mortgage payment, y'all, and we don't call our mortgage company, what's going to happen? They're going to send you a letter. They're going to be like, hey, did you forget to pay this? You know what I'm saying? Or whatever. So this is the thing, and all they're asking is for the people to give them updates. And that's the effort. They cannot do anything until after 12 months. So if you're not doing anything, you haven't communicated with them within there. So that's the kind of it's kind of a bad rap. That's what we kind of call it. I like to call it retirement mortgage, but it is like I've told Charlotte, hey, we got a lot of equity in our house. I can pay the mortgage, but I don't want to have to. You know what I'm saying? If you go there and you have other things, and it takes pressure off of you. It's just less stress off you. And the higher end people who have in the West Coast in Texas, who have $3 million homes, $4 million homes, they're doing this. It's harder for people who actually needed to get it because they're just afraid of it. So, the other facts: the heirs can purchase the home for no more than 95% after the title holder's death. So, if that's if the house is if they owe more than what they thought, what the house is worth. It's only going to be 95% of appraised value. So it's not even 100%. So you got enough for real estate commission in there, a little bit. Monthly payments can grow in a line of credit, earning a 0.5 up to half a point above the note rate. Depending on the program, that's the basic rate. If you want to get all fancy, you can go to the one that's 2% above the rate. Borrowers may own other homes, so you don't have to not just own another home. That could just be your your primary residence. Reverse mortgages must be a primary. Easier to qualify than traditional mortgages for retired buyers. No credit score requirement. Must qualify for taxes, insurance, and HOA dues. So if you're in a neighborhood and you got a $100 a month HOA, your taxes are $3,000 a year, and your insurance is $1,500, you just got to be able to afford that. Some states offer reverse mortgage at the age of 55. For example, the home safe second, and then some states offer that home safe second. So like if someone is disabled and they need to get it, or they're just 50, or they need to do some major repairs to their home at 55, some states allow you to do it at 55. So that's my information. Again, you talk about the QR code.
Your QR code safe?
My QR code is safe. My QR code is safe.
That looks a little shady.
And then, but he is right, because people can do different stuff, but the QR codes are safe. And even with mortgages, if somebody emails you something, like if I send people links now, because we go through it because we want to verify the person. So like even now, like you can't have the same email address. Like, oh, I'm filling this out for my husband. Like when I first got into the business, it was so much stuff. I worked for a home builder. A lady did an application. I was like, oh, y'all's credit is good, you know, da da da. And then she's like, well, what's on there? And it was K Jewelers was on there. What did you get from K Jewelers?
Yeah.
Oh my God, you know what I'm saying? They were separated. I didn't know. I'm doing it. That's when we did applications over the phone. I'm putting in the stuff and going over the debts. And then this guy comes up to the office. I was 23 years old. Coming, why did you tell? You know, so there's different, you know, guidelines and stuff for that stuff now. So we want to make sure that's your email, that's your phone number. We're gonna text you. We're gonna do this. Or like some people, they won't do it. I'm like, hey, I'm gonna have to call you, but you're still gonna have to verify, because now you can't even get documents emailed to you unless you're verified.
Right.
So like it kind of slows people like, oh, it can close in 21 days. Not if you got everything mailed to you, because they're going to mail you those documents and things like that. But those are things, if you do have someone that's older, like I said, it's not the only option, but you should at least get that option, because it kind of helps the family. Because if you got kids, you know, sending their mom $400 or $500 a month, you know what I'm saying, to help survive, and the house is sitting there with a lot of equity, that may be an option.
Is there a minimum or a maximum?
No. The maximum is $4 million for Finance of America's thing. So there's other companies that do more. Wells Fargo, of course, Bank of America, but most of the time people aren't taking, you know, that much out.
Is there a minimum?
No. No. So I think for them to actually, because I think there's not a minimum. The lowest I've seen is $25,000. So
$25,000? House was worth $25,000?
no, that's the least somebody took out.
Oh,
Okay.
Because then she just really needed it for repairs and just to stop her payment.
right.
That was last year. So literally, her house, like plumbing was junk. I mean, it's fair burn. The money was.
How much was the house worth?
House was worth like $350.
Oh.
So she just wanted that extra.
She
equity.
barely made enough. Yeah, she barely had enough equity, and she wanted to really get rid of the payment and then to get new washer and dryer, new refrigerator, stove, because she cooked for kids, grandkids, and that was it.
And when you pull out that money, you can use it on anything.
You can use it on anything.
So like, if my dad did it, he could may not need it for the house, but he could invest it or whatever.
Yes. Now they are on the house. Like if they're not gonna. So when they do an appraisal or inspection on the house, so if they see like your water heater shot, they're gonna make you fix that first. You know, but you can't so they're gonna make, because that's their asset. Think about it. They want the asset to be in good shape to make it another 15, 20, 25 years. So yes, but after that, you can do whatever. So, and they're not gonna, just so if it goes in, it's not something to use like if you wanna, you can add a room to it and all the other do all the other kind of stuff. It's not something you want to do as a renovation, but definitely as like, okay, we want to get a patio, we want to add a pool, something like that, because you're getting a lump sum of money. If it's some type of renovation loan, then the bank really wants to have, contractors involved to do draws and stuff like that. We don't want your uncle to come over and say, hey, I built a new uncertified or unpermitted addition to the house. Yeah, but they can do anything as long as he lives in that house. And whatever amount he gets used for, he can set it up how he wants it. He can get monthly payments, he can get a line of credit, an annuity, a lot of things.
And how much equity again can they draw?
You want to, ideally, people want to have at least like 40% equity in their home. And it depends on the age. Somebody could have less if they're older, you know what I'm saying?
What I meant is.
Oh, how much can they take
Yeah,
out?
let's say you have 40% equity.
That you want to have, so if they own the house free and clear, and they just say they just turned 62, they could probably take out 60%, 65 at the most. Cause they're at the lowest age you can get it and everything. So if they're older, they could, you know what I'm saying, they want to do it because you never know what the market is doing. So that's why they're doing it. But yeah, the most they can really take out, like say they own it free and clear, is probably 65%. But there's a lot of people, I mean, you guys know how you can pull up the things with the high equity, things on there, or people who like, I can't sell my house, I can't live in this house, or I've had people do you can refinance, I got a reverse mortgage, I can't get another one. Yeah, you can. Your house was worth $300,000 when you did it, now it's worth $600,000.
Also,
You can refinance your reverse. You're not stuck once you do that.
okay.
You could go sell the house, or you could just say, okay, I got back to work, I had a medical issue, I'm back on my third career, making good money, and I want to start making payments, or I want to do whatever. Yeah, you're not stuck in it. It's no different from any other mortgage product, other than you're not obligated to make a monthly principal and interest payment. Yeah, but if you have clients with a lot of equity that are older, it's something they may want to check out to get a traditional mortgage pre-approval and get what's called a reverse HECM, home equity conversion, and get a mortgage pre-approval for that. And it also saves them a lot of regulated fees and stuff like that, interest and all that other kind of stuff, so they get to do it. And then they don't have to move. Again, they're going to be pre-qualified for that, so they can wait to close. You can still do your back-to-back closing without them doing 2 moves and all that other kind of stuff. But yeah, your dad can do whatever he wants to as long as he still lives, that's his primary residence. So, any other questions?
That's a win-win, I mean, for the
That's
bank.
very good information.
That's a win-win.
Yeah, it's a win-win for a lot. I mean, a lot of people too now with the homes being more